quite there yet.
Oh, so nobody's going to show up from nowhere.
Yeah, no, not at all. Not at all. Economy right now, in fact, if, one has to also consider child planning, family planning. It's the cost of raising children nowadays. It's more, we're raising children in dollar terms, so one has to be mindful of that. Hey, and we are live. We are streaming live. Yes, indeed, streaming live on YouTube. So, good afternoon to you, fantastic analysts with United Capital. I'm sure we're going to be waiting for folks to come in and follow through on this great report you guys have written. How long did it take you guys to write this report? It's so in depth. It is incredible. Wale, how long does it take to write this report? It's in depth. That's why, go ahead, tell me.
With the support of this, my very, very sharp analyst, I think, how many weeks, guys? Six.
About I think it was about 6, yeah.
6 weeks. Yeah, roughly 6 weeks. I think with working from home, guys were extra gingered and, a little bit more clear-headed to get the job done.
So is policy at United Cap going to, shift a little bit to align folks to work from home in this new normal?
I mean, I believe it has. They are working from home at the moment, both Haifami and Busala. Wale is the only one in the office as we speak. Most of our colleagues are working from home. You said?
Oh, wow. I said, Wale, your effort is appreciated.
Thank you, Princess.
All right. So, God, so many questions. I wonder if we can cover everything in an hour. I don't know why I had 3 hours in my mind. I was like, we're going to just go sector by sector.
Wow.
That's what I thought. For some reason, I just thought we were going for 3 hours because you can talk about this global. In fact, we could dedicate over 2 hours to the global economy with everything going on. Nigeria alone. No, actually, 1 hour to the global economy, 2 hours to
I agree with
that much.
you.
Is that intense?
I agree. I mean, with a COVID-19 halting everything globally and then affecting everybody, regardless of which village you reside, yeah, is worth it.
Yeah. Incredible stuff. It is incredible. There is so much going on. But is there a level of optimism with you guys with where things are going, through 2020? Are we feeling optimistic?
I mean, for me, I feel like we've already hit rock bottom. Where else can you go from here? It has to be up.
Yeah.
It definitely has to be up. It might not look necessarily like it, but where else can you go? Even in the US, news are negative. GDP growth negative. Nobody wanted to get worse. So things have to be provided by analysis or by prayer.
Oh, goodness. UK, I was just looking at something today. UK GDP, I think the contraction there was equal to the amount of growth they had for the last 18 years or something. It's just really tough everywhere. It's tough, incredibly tough. I don't know how we plan to climb out of this. And if you add the second wave fears, I mean, the US is getting these extra waves now, and it's summertime. What happens when winter comes? It's scary stuff. It really is. Okay. All right. Okay. Gosh, what was on it? Hey, were you all in line with the federal government saying that the schools reversing course on the schools and saying the schools should not open after all? As the schools facing exams, the GS3, SS3, and so on. I think it was a safety issue, right?
Well, I think that the safety concerns are a lot.
apart from, you can say that children are young people and they might not suffer from the effect of COVID-19 as much if they catch it, but they have elderly people that they're going to go on to, and the risk of spreading the disease or the virus in school is just a whole lot. It would have been better if we had like structures in place that would allow them to study from home, but sadly we do not. I think I agree with him.
Yeah. Okay. All right. If you're just joining us, now we're just having some chit chat here with the smart folks at United Capital. The smart lady that was just speaking was Ayobami Omole, an analyst that covers the banking sector. She's also joined by Busola Jeje, who, of course, another smart analyst at United Capital that covers oil and gas. And the fine-looking gentleman there is Wale Olusi, who is the head of research at United Capital. My name is Rotus Odiri. I host Business Express on 98.1 FM. And what we are here to discuss for you lovely people that have just joined this webinar is the outlook for the global economy and Nigeria. What's next? What's next? What's going to happen next? But first, before we begin, I do have to tell you folks about the great company that is United Capital. But let me give you the agenda. If you're just tuning in, let me give you the agenda. I'm going to, of course, tell you about United Capital. And well, I was supposed to introduce the team after that, but I've already introduced the team. But I'll introduce them again, just in case if you're tuning. If somebody else is tuning in, I will introduce the team the second time. We're then going to have questions for. We're going to take Q&A from you folks out there because I know you're burning with questions here as well. So United Capital, let's talk about the company. Let's talk about the smart people. By the way, I get their reports. You should sign up for their reports, sign up for their newsletters, get constant updates on the markets from United Capital. They give out great reports. So United Capital is a leading African investment banking, asset management, trusteeship, and securities trading group. This company has variety, all right, when it comes to financial services. And variety is what you should be looking for when it comes to getting your financial needs met. So they provide a bouquet of diverse financial services to individuals, you're a person on your own, right? Companies, firms, and governments, right? Enabling growth at all levels, at the individual level for a person, at the company level, and also at the government level as well. So their expertise is, hey, it's impressive, all right? Trust me, I've read their reports, and we're going to talk about one of those reports now. Now, since it was founded over 50 years ago, they've been in the game for a while. United Capital has cultivated and sustained a heritage of excellence in the financial space in Africa. Track record of transaction execution, industry leadership, client focus, unmatched. I tell you, these guys are really good at what they do. United Capital has achieved this by providing top of the line financial services, consistently demonstrating a commitment to execution, excellent service delivery, and client satisfaction. Trust me, talk to their clients. They'll tell you, they'll give you the testimonies. Now, through the years, the group has innovated with each season and found smart ways to provide even more value to their clients by showing a spectacular ability to adapt to change. And the report we're about to go into is all about adaptability, right? Because we're talking about the new normal. Now, some of the recent headline achievements of the firm include joint issuing house on the United Capital PLC 10 billion bond issuance, first bond issuance by an investment bank in the Nigerian capital market, top of the line, first place. Co-arrangers on the United Capital PLC 5 billion commercial paper issuance, first commercial paper issuance by an investment bank in the Nigerian capital markets, again, first place, top of the line. Joint issuing house on the Lagos State 100 billion bond issuance, largest bond issuance by a state government. And of course, United Capital would be part of that. They would be spearheading that. Joint issuing house on the Dangote Cement PLC 100 billion bond issuance, largest bond issuance by a corporate entity. You can see all the records United Capital is setting here. Just setting records left and right. Fastest growing asset management firm with record growth in its Euro bond fund. You want to look, by the way, when you want to talk about preserving your purchasing power and investing in US dollar assets, you really want to talk to United Capital about the Euro bond fund so you can protect yourself, right? So again, fastest growing asset management firm with record growth in its Euro bond fund, bond funds, and money market funds over the last 18 months. All right, they've held it down. United Capital Research is at the forefront of providing clients and the investing public with timely, in-depth markets analysis. And geez Louise, when we get in-depth in this report they've written about the outlook, what's next, you're going to see what I'm talking about. So in-depth market analysis for making intelligent investment decisions. This they achieved through the publication of daily market insights. Just a few minutes ago, I told you guys, sign up for their newsletters. I get United Capital newsletters every day in my inbox. I depend on them for keeping me up to date with what's happening in the market. So, as I said, in-depth market analysis for making intelligent investment decisions. They've achieved this again, publication of daily market insights, weekly investment recommendations, and the flagship economic and financial market outlook reports. That's what we're talking about today. Last week, United Capital published, it's titled Up in the Air, right? Up in the Air, which assesses the impact of the coronavirus pandemic on the global and Nigerian economy, as well as the financial markets. So again, let me introduce the great folks that I'm going to be speaking with, the analysts one more time. Ayobami Mole, who of course covers the banking sector, an analyst that covers the banking sector. Busola JJ, who covers oil and gas, and again, Wale Olusi, the head of research. So folks, let us begin. I have questions. I got first. First of all, let's start with the title. Up in the air. Is that supposed to mean uncertainty?
I mean, maybe Ayobami want to say something about that first, because he dwelled most on the global part of the reports. But yes, I think it's open to interpretation. Some folks think, what is up in the air? Is it virus? Some people think, if you take it as an adage or a figurative way of speaking, that's uncertainty. So, I mean, it's our way of getting you to get a copy of the report and, opening it. But I think my colleagues definitely have, thoughts on that too.
Okay. Right. So when we say up in the air, it's because of the level of uncertainty. The virus has been up in the air since January or since December in China. And looking forward, we can't even say this is when it's going to end. There's so many questions that, that needs answers, and we do not have answers to. Are we near the peak of the virus yet? Are we going to get a second wave of infection? Is there going to be a vaccine? If there's going to be a vaccine, when are we going to get a vaccine? Or is everybody just going to develop herd immunity? Like I said, is there going to be a second wave of infection? Those are the questions that we have on our mind. Am I going to go back to work this year? Am I going to party in December? Those are the questions that we have. So everything is just up in the air, and the level of uncertainty is quite high.
Indeed. Appropriate title. I think that's an appropriate title. I wanted to start, of course, with the global economy. Yes, there's an excerpt from the report on the U.S.-China Phase 1 deal being on a ventilator. That's how you title it. U.S.-China Phase 1 deal on a ventilator, which is very clever. I like the reference, because to the health issues, which of course is reference to the health of that U.S.-China trade deal. So you said. Compared to 2019, the year 2020 started with fresh optimism from the last minute US-China Phase 1 trade deal that was signed December 2019. However, the signed deal, which one brought clarity to the global trade environment, seems to be on life support. So here's my question to you, Ayobami. Are we on the verge of another trade war? And if so, what are the implications for the global economy on top of the effects of COVID-19?
Okay. So I wouldn't call it a trade war yet, but definitely trade tensions are escalating. And that's alongside with the backdrop of what we have COVID-19 on ground is not a very good thing for global economy. This is the best time for global economies to unite and fight the virus together. And that's one of the things that the WHO Director General has stated, that economies or countries are not uniting to fight the virus together. We already have a case of, a slowdown in trade, and regardless of anything or the uptick that we see in H2 2020, trade is still going to be very low, and the World Trade Organization expects trade to decline by as high as 33% this year. So adding a trade tension to it is just going to make everything worse. And the problem that this causes is that there's going to be a problem with flow of trade, flow of people, flow of information, everything. There's going to be a problem with that. And it's not just China and US that is the problem this time around. China is having problems with other countries such as India. They're having problems with Australia, and they're also having problems with the UK. So this is something we definitely do not want, but it looks like it's definitely escalating, and we might not see clarity until the US election is won. And depending on who wins, that's going to determine whether there's going to be a trade war or not. But it's definitely not a good picture.
Thank you for that in-depth answer there, very in-depth. Yeah, China's picking fights with everybody. Thank you for that. Okay, so I want to ask you about emerging markets. Yeah, part of this in-depth report you folks have written here. Title said, emerging markets, a threat to years of strong growth. Right. So judging by historical trends, you said we expected global monetary policy easing around the world would set precedent for the positive fund flows into emerging market assets this year in 2020. That's what you folks are expecting. Now, here's my question, Ayobami. Do you think any of these funds will flow to the Nigerian markets, considering the illiquidity, experienced in the FX market?
Funds flow into the Nigerian market is looking bleak because of the illiquidity in the FX market, like he stated. Also, FDI, foreign direct investments. We are not expecting any good or any substantial amount of foreign direct investments in Nigeria because of the macro environment. So if there's going to be funds flow into Nigeria, we are not overly optimistic, especially because the FX market is illiquid and the people that are currently in the market are looking for ways to get out. So we're not expecting much. Investors are currently staying off the Nigerian market.
Yes, there's thank you for that. Thank you so much. There's quite an FX backlog that's building. On Sub-Saharan Africa, we're still we're in the emerging market field here, but let's switch over to where we are, Sub-Saharan Africa. Busola's question is for you. So your report again, and I encourage everyone that's watching, please check out this report because the explanations are they're so pretty good, but we still have questions. Sub-Saharan Africa, you said the most vulnerable, right? Excerpt from there, you said majority of the people tuned into this webinar, of course, are in the Sub-Saharan region. Why are we the most vulnerable region?
So for Sub-Saharan Africa, 4 things strike us, making them the most vulnerable in terms of the world economy. So the first thing is majorly our exposure to volatilities in commodity prices, which is what we depend on for export earnings and also for government revenue. In the whole value chain process, African economies are literally at the beginning, where we produce raw materials and so on. And we know that in times of economic downturn and there's uncertainty, you tend to see prices of these key commodities fluctuate to the detriment of our revenue. Then another thing is more of how we depend so much on capital inflows from foreign investors, foreign inflows, so to say. And we all know that the pandemic sort of sparked a risk-off sentiment by investors, causing them to flee from a lot of emerging markets, including frontier markets, due to the whole COVID-19 pandemic and its effect on economic activities. And for African economies, this was quite negative on our currency, the values of our currency, also our external reserves and so on. So that was another source of vulnerability. Thirdly is the fact that in comparison to developed economies, we have lower ammunition in the sense that both fiscal and monetary policy can do so much in terms of fiscal stimulus packages and so on. And that's why we've seen a number of African economies take up the debt relief program by multilateral organizations like the IMF, like the World Bank, also looking for borrowing and so on. So that's the fact that we don't have that war chest. We can exactly take on the pandemic and its effects. And lastly is our relatively weaker healthcare system. I mean, when the pandemic was surging across world regions, we saw countries in Europe, in the US, significantly battling with the pandemic and its effect on its citizens. And these are countries that have a relatively better healthcare system than Africa. So our relatively weak healthcare systems also made us highly vulnerable. And let's not forget, testing capacity is not as much. So we don't even know the amount of people that have the virus or whatnot. So these four factors all together really, really made us the most vulnerable in the entire economy.
Very comprehensive answer there. Thank you for that, Busola. All right, Wale, I'm gonna win here. Wale, thank you for the again, Busola. Great answer there. So I want to again. I'm going to keep referring to the excerpts from this great report you guys have written. So there's an outlook here where you said, looking ahead, we believe the shape, duration, and size of the recovery will vary from country to country, depending heavily on the improvement in the external dynamics and the time frame required to bring economic activities back to pre-COVID-19 levels. Wale, my question is this: at what point does the economy of Africa become less dependent on external dynamics? You know, is the AfCFTA our savior, the African Continental Free Trade Agreement?
Okay, so I mean, thank you for the question, Rotus. I also want to use this opportunity to thank all our viewers who are joining us. I think from all over the world, because I mean
Yes.
that's what webinar afford us. And of course, straight to your question, about this time 2 weeks ago, here at United Capital, we held a Pan-African e-conference where we treated something related to the question you asked. And just like Busola mentioned right now, the real problem with why Africa is so vulnerable is because we depend so much on primary product exports. Take Nigeria, for example, we export crude oil, we import refined crude. So whether the price is up or down, we are not great. If you go to Kenya, it's mostly horticultural or coffee or something. As dynamic as South Africa economies is, they also depend so much on the mining sector, precious metals majorly. Ghana is cocoa, gold, and a few other, yes, recently crude oil. So Africa needs to industrialize if we don't want to be too dependent on, external dynamics. And the reason why we need to industrialize is because it gives us, the ability to be less vulnerable to sharp movement in commodity prices. Take the price of crude oil in 2020, for example. It has moved from about 60 to almost below 20 in this same year, and it's back to about 40 now. Now, let's think of the price of the fuel that we use to fuel our cars. The president moved it down to about 123, and now it's back to about 145. Now, compare the two changes in prices. Which one is more? Refined crude has less volatility compared to, what's it called? Crude oil. If you take cocoa, for example, which Ghana depends heavily on, Nigeria also exports a significant amount of cocoa. So is Cote d'Ivoire, which is the giant among the Francophone-speaking countries. Price of cocoa also move up and down, but the price of chocolate, which I think you like a lot, Rotus.
That is correct. That is correct.
The price of chocolate doesn't move as much. So Africa needs to find a way for us to industrialize. We need to, find a way to set up industries that can convert, these raw materials into finished product here in Africa. If we are able to do that, we will not only create more jobs, we'll also be able to have a more stable economy. The kind of supply chain shock that this COVID-19 created wouldn't have affected Africa that much because, I mean, to be very honest with you, the cases are not as high in Africa compared to the rest of the world. So we need to industrialize. That's what we need to do. But to industrialize, we need to, develop our people. We need to invest heavily in human capital development. We need to invest heavily in transportation. Moving from Lagos to Dubai is almost cheaper than going elsewhere in Africa, either by flight or by whatever means. We also need to build our ports. It's still very cheap to import or bring in certain things from China than to bring it in from certain places in Africa. So we need to build all this infrastructure. And I think that's where the AfCFTA comes in. We need to get that deal done and get it running. I think it might just be what we need. Yeah.
Fantastic. Thank you for that. Thank you for that answer, Wale. Busola, I want to come back to you, and I want to ask you about helicopter money. So again, in your in-depth report that from United Capital, again for our viewers, which is looking at their half-year report, asking, up in the air, what's next? There's another excerpt here on monetary and fiscal policy. It says there in that excerpt, helicopter money on a rescue mission. In 2020, the outbreak of COVID-19 sent global central banks on a tsunami of expansionary monetary policies ranging from huge rate cuts to quantitative easing and less conventional tools like helicopter money. Busola, if you can define helicopter money for our viewers, just in case, if they can, I'm sure they know what that is. But why haven't we seen any helicopter money falling from the skies in Africa?
All right, so basically, to dumb down a bit, helicopter money means when the central bank authority of a certain nation prints new money into the system and distributes it directly into the hands of households or businesses. Literally, they credit your account. And it's similar to what the US did in terms of the stimulus packages, where they released about $1,200 into the hands of US citizens, right? And for Africa, I think helicopter money generally, it's best for economies that have sort of like low inflation, because it's quite direct, it's quite in the hands of individuals, and it can spur inflationary pressures. And these are things that in Africa, we might not exactly want to take that route. We might want to take a more of indirect policy, maybe in terms of providing intervention facilities for businesses and for SMEs and so on, right? Because in Africa, we have a number of big players still having like double-digit inflation. Just look at Nigeria now, we're tending towards 13%. You have the likes of Senegal, Liberia that are also in that range. So the whole concept of helicopter money can come with significant backlash and significant inflationary pressure. So the preference was for other conventional tools like rate cuts and disbursing funds and so on.
Thank you. We have a ways to go before we can expect to see that happening. But thank you for explaining what's going on. Yeah, the inflation for May is I guess you're heading towards 12.4%. You're right. Okay. Busola, this is still for you, or in Ayobami, if you want to hop in on this. Another part of the report that talks about the headline, foreign exchange broad-based weakness. You mentioned, of course, that the lone gainer against the dollar as within Africa was the CFA franc, right? Which, of course, was supported by its link to the euro. Also mentioned, of course, in the report that there was a critical milestone that was achieved in the transformation of the West African CFA franc to the ECO in H1-2020, first half of the year. Now, of course, this was pushed by the eight Francophone countries that form the West African Economic and Monetary Union, the UEMOA. However, there's been no further progress made on the implementation of this new currency, which would facilitate the trade that Wale was referring to in his answer. So my question to you, Ayobami and Busola, whichever you wants to take this. President Buhari of Nigeria, recently reacted negatively to the UEMOA, saying that they were moving ahead of ECOWAS. They were moving too fast. He said, pump the brakes, slow down. My question is, can unity still be achieved in adoption of that currency? Can we still get unity within the African continent?
All right, Ayobami, should I take this?
Okay, I'll go ahead. We wrote an extensive report on ECO, transforming the CFA franc to ECO. We titled it, is it a change in currency or a mere name change? The adoption of ECO by West African country or by ECOWAS country has gone back as far back as 15 years or more than 15 years, but they've never gone ahead to finalize because of a unification of some economic indicators. For example, the inflation rate has to be low or has to be around the same rate for countries to come together to adopt a single currency. We have countries like Liberia having as high as 22% or more than 22% in inflation rate. Nigeria, our inflation rate is currently tending towards 13%. But the CFA franc countries or countries that have been using the CFA franc, it's easier for them to transition into ECO or just to change into another currency. But if there's going to be if there's going to be a unification, or if all the countries in West Africa, that is all the ECOWAS country, are going to come together to adopt the ECO, it is now in the hands of the WAMS country, that's the West African Monetary Zone, the non-CFA franc countries, to work on their economies and bring inflation rates down, make sure that their fiscal deficit is very low, and make sure that there are a lot of requirements, and none of these countries have met the requirement. So the CFA franc would definitely go ahead and continue with their ECO. But if we want to join the party, we have to work on our economies.
So we have work to do. We got work to do. Thank you so much for that answer, in depth there. Nigeria macro. Let's we're in Africa, of course, but now we're getting here where we all are. Wale, this is for you. I gotta ask you after this question. Let me read the excerpt from, again, this great reports up in the air. The economy is what's next, from United Capital. Nigeria, can stimulus packages prevent a recession? That was, the mini headline in this great report. Now, there's a quote. The quote here in the report says, "What could have been a flourishing year for the Nigerian economy was caught in the web of a global public health crisis, which grounded domestic and external economic activities." Wonders, Wale, what about Nigeria before COVID-19 suggested that the economy had a flourishing year ahead of it? Help me out, please.
Okay, I mean, I know where you're coming from, Rotus. Maybe flourishing make it look, better than what it really was.
Yeah.
But I mean, we were coming from a negative growth in 2017. And Rotus, we've been having conversation, me and you, even long before 2016. Nigeria was growing, 5-6%. That's probably more flourishing in your opinion. I want to assume that's where you're coming from.
Yes.
But, under the current regime, they've not been so lucky. Let's leave the policy of the government out of it. But oil prices have actually not been where they were before 2016, 2015. So growth across the oil exporting world has been considerably subdued. And in 2019, Nigeria was able to do something well above 2%, for the first time since 2016. So our view was that, take out COVID-19, 2020, I mean, that year that all of us have heard so much about, right from school, Vision 2020 and all that, it was looking like a great year because there was no election. We've done election last year. Even globally, US and China, they were all, talking about a trade deal. Brexit was wrapping up. So some of the uncertainties, in the global market were even going out of the way. And in Nigeria, we are looking towards, a more stable future. So we were thinking growth is probably going to be stronger, maybe close to 3%, but nobody, we downplayed COVID-19. We downplayed it. Many analysts did. A lot of analysts in World Bank and the IMF, they never saw this coming. Nobody knew COVID-19 would be able to put a pause on the global economy, and it did. And now all we are thinking about is, how is the recovery going to be? Is it going to be V-shaped? I saw the AFDB's report during the week. They are saying a V-shaped recovery. I mean, we will all appreciate that for the African economy. For the Nigerian economy, what we've seen is a situation whereby already in Q1, growth has already slowed. It has slowed back to the levels they were in 2018, below the levels they were in 2019. Now, if you lock down many of the biggest states in Nigeria in Q2, they account for more than 50% of the economy, then we are looking at a contraction. And I'm not saying that because I'm just, looking at this. We look at PMI, the Purchasing Managers Index. Those numbers are already below 50 for the month of March, April, May, and probably June. The last time they were below 50, which is a threshold for positive growth in the economy, was during the crisis period between 2015, 2016, and 2017. So, Q2 is definitely a negative growth. If we are lucky, supported by some of the helicopter money that Busola already spoke about, You know, what the Vice President's Committee on Sustainable Economic Sustainability has done, and all the fiscal and monetary measures from the central bank and the Ministry of Finance, if you are lucky, we may begin to see recovery in Q3. If not, then maybe Q4. That will make recovery look a little bit more of a U shape if you look at it quarter on quarter. But if you look at it year on year, then hopefully 2021 will be a better year. We'll all have survived this year, and then we can start chasing growth again. I mean, that's what we are saying in this report. Rotus.
Thank you for that. Okay, so I take your explanation, because when I read it, I was like, so now you've got the term flourish. It makes sense now. But I want to stick with you. Inflation, Ayobami and so they've already they mentioned inflation when they were talking about the the CFA franc, African unity with regards to a single currency. Your estimates in your reports, you're looking at about 13.3%. But again, May year on year we're at 12.4. I've seen some estimates that go as high as 19. Why are you folks looking at estimating at least 13.3?
Okay, I mean, thank you for that question again. And I think the folks that are looking at 19%, they're extremely bearish on this economy. Yeah. They're extremely bearish. We have a model that we've factored in the worst case scenario into that model, and the worst case scenario being if there's an adjustment in electricity prices. That was the biggest driver sometimes in 2016 when we saw inflation trending towards that levels. We're also looking at what is happening to food prices, which accounts for about 50% of the inflation basket. But all we are seeing is a situation whereby it's unlikely that inflation will go outside 13% significantly in 2020. We doubt it very much. With the benefit of the model we have looked at, the big issue is people are losing jobs. Rotus, people are losing jobs. If you're not losing your job, some people's salaries are being reduced or slashed. That means consumer spending is also pressured. If you're not spending as much, demand might not be as strong as well. So maybe we're a little bit even too bearish on how fast inflation can grow. Again, I heard from NEC, the Nigerian Electricity Regulatory Commission, that it looks like they are suspending that adjustment on the electricity tariff probably until next year, which is considerably considerate on the economy. People have lost so much this year. So now if you take that out, maybe we will now be left with the impact on food food prices, and of course the currency adjustment. About 6% actual currency adjustment have been done this year. The movement from 300 to 360 or 380 now is on the official rate. What the markets can really feel, is the 360 to 365 movement. And don't forget also, there was a time that fuel prices actually reduced during the same year. So put all of that together, maybe 13% is even a better forecast, or maybe less, because when we were writing this report, we didn't see that electricity tariff increment will be suspended. We thought it would still go ahead. So I mean, that's why we are forecasting this, Rotus.
All right, thank you. Okay, great explanation. I appreciate. I'm sure the viewers appreciate that. Lots of clarity there. You mentioned the exchange rates. Wale, but I want to come to Ayobami or whichever you want to take this. So me, Ayobami, since she's in the banking sector, but there's a number of questions here for the exchange rate. Now, your report said you believe the odds are in favor of a further Naira adjustment, which may take the official rate to 410 or between 410 and 430, right, by year end. However, you said that you believe the CBN will continue to defend the value of the local units for as long as it can, right? Thus, concerns about further adjustments are likely to be discouraged, discourage large size FPI and FDI inflows for the rest of the year. I think Busola was already talking about the backlog earlier on. But Ayobami, let me start with you. What odds suggest a further naira devaluation will happen? Wale already just mentioned one. We've gone from the official rate is now 380 or 381 from 360. But if we're moving to 410, 430, what odds suggest this will happen?
Well, the odds that will happen are the current fundamentals that we have on ground. The fact that oil prices are, we've suffered, we've gone through the bottom of the oil prices. Oil exports this year is going to definitely be lower than last year, especially because there's lower oil demand and we have a supply cut from OPEC. Also, the fact that we have a huge backlog that the CBN has tried to put a key on. Once the CBN starts intervention in the I&E window again, we will see a lot of capital flight, and we are not expecting a lot of capital inflows like we stated earlier. So these are the things that will add up to the fact that there might be another adjustment in Naira.
I mean, if I want to throw a little bit light on that as well, based on what Ayobami have said, we also looked at, the size of adjustment we've taken in the past when we had similar crisis, especially around oil. Oil is always the biggest driver of an adjustment in currency in Nigeria. And that's because about 90% of our export is oil. The last time we did this, you remember, Rotus, we initially moved it to about 200. Central bank reluctantly eventually moved it to about 380 or so. And then when the I&E window was eventually done, we landed at 360. But how many percent have we done so far this year? About 6% in the actual market. Maybe larger if you look at the official rate, but about 6%. So based on that, we are afraid, we think there's still a lot of concern if we pay about 2 billion naira backlog that is basically in the hand of the foreign portfolio investors. The reserve might be significantly affected, and then, but with what the central bank has done lately, heeding to the World Bank request for us to unify, I think we may just have enough firepower to keep it at current level, maybe up to the end of the year. And if central bank can manage it very well, you might avoid further, devaluation. But all the, historical analysis that we've done and the real value of the currency also was something they call RIA, is suggesting that it looks like about 400. But I mean, the central bank has a bigger picture, so they have our best interest at heart.
Well, we certainly, that is certainly the case. Okay, so while you've already answered my question as to where the central bank would probably possibly get the firepower to defend the currency, but I also want to ask, maybe we'll bring Busola in here. What do you make of the World Bank's demand that exchange rate unification must happen before we're granted the loan we've been looking for, between 1.5 billion to about 2.5? What do you make of that?
All right, I think for us, we believe it's a step in the right direction. I mean, a single rate has been something that foreign portfolio investors have been clamoring for. I mean, you go on Google and you try to Google Nigeria's exchange rate and you see 3 different figures and you're confused and you don't know exactly. It's not easy coming to do Nigeria if there's no clarity on what rate should be chosen. And a second thing for us is the fact that the unification of exchange rates sort of discourages arbitrage, where people try to speculate on the currency and make, riskless profits, rather buy from one window, sell, and sort of distorts the market. And it has cost CBN a lot trying to police those kind of activities across the several windows. So we really believe it's a step in the right direction, and it's a clear position on behalf of FPIs coming to do business in Nigeria.
All right. Okay. So I put a figure to this. I've said, what did I say about backlog? Anywhere from one. I think we've already thrown out a figure of 1 to 2 billion. But what's the estimate from you folks as far as the backlog of dollar demand? 1, 2 billion, or it could be more?
Well, so one of the things we looked at the historical inflow by the CBN in terms of intervention at the I&E window, and prior to the time where they undertook the decision to significantly reduce intervention sales. From about January to March this year, they had intervened to the tune of about 5.4 billion USD, with on a monthly average, that was about 1.8 by which the CBN was, selling. So if you are looking at the fact that April, no intervention was sold, same thing for May, same thing for June, and we also saw some excess FPI funds flow into the small size BDC market that inflated the rate to about 460. The backlog could be as high as 4 billion. To be very honest, it could be as high as that, judging by history.
That's high. Thank you for that analysis. Okay. So this the natural next question for anybody watching this is, what advice for our viewers, your clients? You guys got clients. Again, United Capital has clients at the individual level, as corporate clients, even the government is the client of United Capital. So what would you say to your clients? What do I do in light of all this FX discussion? Do I hold dollars? Do I, what do I do? What do they do?
Well, if you allow me to jump right at that route, is should you hold dollar? Definitely. And here at United Capital, we have, an appropriate product for you to do that. And that's because over the years, I mean, even if you invest in Naira, the rates are very low at the moment. Our money market fund is one of the best in the market, by the way. It's going for 6%. Our equivalent dollar note fund, the Eurobond fund, is doing excess of 6%. So it still makes sense for you to keep your, dollar, your savings in dollars if you have one. If you don't have one, don't go and buy dollars. I wouldn't encourage you to do that. The reason is because if you want to go and buy now, you're probably going to the primary market. The central bank will not sell to you. The parallel market. Parallel market rate is trading around 450. With what the central bank is doing, that rate will crash ultimately. Remember our projection of about 400. If all of this problem goes away, the entire rate will probably collapse around 380, 85, or 400, worst case scenario. So if you have Naira, don't buy dollar at the parallel market. You can invest it in our bond fund. It's doing about 8 to 9%. If you are a low risk investor, you can do that. If you want to take a little bit of more risk and you have a long-term view, you probably want to look at, stock market investments. We can give you the best stocks to buy, stable companies that even if the markets rise and fall, they will always hold value. And, we've seen that when the coronavirus struck in March, some of these tier one banks went as low as 10 naira, take Zenith, for example, or GT about 16 naira. But today they have rebounded back to about 23, and how much yield is on their dividend? Very, very interesting. So if you're a long-term investor, you can do that. So, those are the options for you as an investor. If, considering all of these things that is happening, the most important thing is that this is a year to preserve your capital. Don't lose your money. The returns are great, but try to preserve your capital. And the companies you want to be looking at are those companies that, they've demonstrated long history of solid corporate governance. They have correct the SEC regulation, on them. You want to check their track record. They don't infringe on any, penalties and all that. So, United Capital is one. You can do that with us. So security of your fund is key. And I think Busola will tell you about rates when we get into the fixed income market. But because rates are low, returns are really nowhere to be found. Just keep your money in safe assets. Eurobond fund, money market, bond fund, depending on your risk appetite, or maybe equities in companies that are fundamentally sound. Rotus.
Great stuff. Great stuff. So you folks that are tuning in, you've heard the advice. While they're saying tread with caution, don't go out there and go buy dollars if you don't have it already. Invest with the Eurobond fund and the other dollar assets that they have, securities that they have, investment options that they have over at United Capital. So good stuff. Well, thank you for that on the exchange rate and the whole conversation around dollars. Okay, so Busola, I want to bring you in, but I want to ask you about this section, another section of your report, policy reforms. Will Nigeria let a good crisis go to waste? And Busola, my question to you is the likelihood of the following being completed in 2020. Now, this first one, the petroleum subsidy removal. Just yesterday, the Minister of State's Petroleum, Timi Silva, put out a press statement saying that there's deregulation has happened, full deregulation. However, Busola, I want to ask you about the foreign exchange components of importing fuel, if you will, and then also power sector reform. Wale already earlier talked about the suspension of the increase in tariffs to next year. So how do you get power sector reform if you've already postponed that? So go ahead, please, starting with the FX component of subsidy, petrol subsidy.
All right. So the issue of subsidy has been a long thorn in the flesh of the Nigerian government. I mean, we're looking at some data in the office, and we realized that subsidy had consumed about 700 billion in 2018. In the first half of 2019, it was as high as 500 billion, and these are huge leakages, for our revenue that has already been strained. And that's when the Petroleum Products Pricing Authority came up with the new monthly market-based price regime. And recently they increased prices, which was sort of like a positive signal that, okay, we're really being serious this time, reflective prices, we are no longer going back to subsidy. But two things, especially like you said, the foreign exchange component, two things that struck for us was the fact that when oil prices are well underway of recovery, like post-pandemic, if we see pre-pandemic levels as high as $60 per barrel, and then you now see that transcend into landing cost and open market price climb as high as 200. Will the government would they still be okay with, selling at these prices to Nigerian consumers, given the effect it would have on inflation and, whatnot, prices in the economy? Then for the foreign exchange component, so currently it's only the NNPC is the sole importer of petroleum currently, and the foreign exchange component that is used in computing the landing cost is the official rate, which is 360, which the NNPC can easily access. But then, now that it's been moved up from 360 to 380, we expect that to filter in the prices that that will be released going forward. So definitely, we might see an uptick in PMS. And again, we don't know if Nigeria would, because we sometimes we see a bit of like a policy flip-flop, and where we say, okay, there's no longer any monthly market-based regime. So that can be a huge problem. Then for the power sector, so the power sector reforms, I think it's more of like a basket of policies, right? And it's more of long-term. If you look at the Siemens deal that we signed a few years back, it's to 2025, 2025, and then we are starting to see small traction. I know the government announced recently that we're starting pre-engineering and looking for concessionary finance. So that will not be completed this year, obviously. It's a long process. But what's key for us is because I know in Nigeria, we sometimes have issues with implementation. The problem is, would we stick to what we are saying in that report? Would we, if governments change, would we continue to the end and finally have 24/7 lights that we've all been dreaming of? Yes, and like Wale mentioned earlier, for the tariffs, for electricity cost reflective tariffs, we've seen it's postponed beyond 2021, and we expected that, given the fact that increased electricity costs would have a bad impact on consumers, and also the fact that distribution companies in themselves haven't even made a huge progress in terms of metering. So that is looking beyond 2021.
Great stuff. Great stuff. Gosh, we covered a lot here. We started with the global markets, US and China. We've gone to the African continent, the African Continental Free Trade Agreement, the single currency. We've talked about helicopter money. We've talked about Nigerian policies. Talked about the exchange rate. We've talked about fuel. We've talked about tariffs. We have to talk about the financial markets. We got to talk about Nigeria's financial markets. Your equity market outlook. You said we expect the market to remain highly volatile and with a short-term gain and short-term gain driven. So I've got some questions here, folks, for you. Wale, is your equity markets outlook a warning to investors? How should they approach that outlook where you're saying you expect the market to be highly volatile and short-term gain driven?
Well, straight to the point, I'll just say that volatility is good, especially in the equities market. The only thing the investors need to take note of is that they need to know when to come in and when to go out, basically. So if the market is up and down, then that's good for you. Take, for example, those that bought were at the bottom of this crisis in March. You know, the all share index was about 20,000 points. Today is about 23. GT Bank went as low as 16. Zenith went as low as 10. You know, United Capital PLC's share price actually went below two naira. Today is over 2.5. So, I mean, despite of how bad the year has been, a lot of people have made a lot of money. So many people have lost money too, I must say, because people had investment in the market before March. So volatility is good. The fact that we are telling you that it's volatile means that you need to pay attention. And you can enhance your returns. If you have money in bond market, in money market fund and so on, you can enhance your return, you know, with the equities market. If the market goes so low, you should buy, because the dividend next year is going to be, the yield on the dividend is going to be significant enough for you compared to your money market or your bond fund. But just keep a decent proportion that you can put in solid stock. That's what I'll say. Rotus.
All right. Good advice there. Good advice. It was fixed income now, Busola or Ayobami. Apart from equities, what do you think about the fixed income space?
All right, so for the fixed income space, we still expect it to be mostly corporate issuer driven. We know that rates are extremely low, especially at the NTB space. So we still expect a lot of corporate issuers to come and issue commercial papers, bonds at relatively attractive rates than what is obtainable at the sovereign market. So, you know, investors can capitalize on that. But on the sovereign side of things, and looking at the yield curve, our expectation till the end of the year is sort of like a mild increase in the NTB and the bond yield curve. You know, I know why in terms of bonds, we're a long way from, you know, 14, 15% that we used to, you know, enjoy, but definitely we're seeing a mild increase. And this is, yeah, the good old days, I agree. But so what is informing our decision is the fact that going into the second half of the year, system liquidity is definitely going to thin out. So far, we've been seeing, you know, net OMO inflows from domestic guys because, you know, the CBN said we can't buy OMO anymore. And we expect that to exhaust around October this year. So that is going to be like a decline from inflows from that area. We're seeing issues with FARC, you know, even the PFAs. This isn't a really rosy economic environment that would increase, you know, inflows into like pension accounts and so on. Then let's not forget the DMO is also looking to mop up more funds this year. I mean, we came into the year saying we'll just borrow 700 thereabout, and now we've increased it to 2.3. And I think so far they've only done about 50 to 60% of that amount. So the DMO is looking to, you know, mop up some of the funds. So judging by these factors, we could see a mild increase in the yield curve.
Please, Rotus, I mean, we have a lot of questions from the audience, yes, but I like to quickly add a little context to what Busola said now. When she started, she mentioned the fact that this is a corporate issuers market. And when you were reading the introduction of United Capital, you also read out a number of transactions that we've done, especially at the private or corporate issuer space. Now, for many, you know, retail investors, many of them who are on this call as well, you might not be able to participate in some of these commercial papers or corporate bonds. And I think that's where the money market fund or the bond fund or any of this mutual fund that I've talked about comes in. You know, because you are not able to do that, but you can participate by buying into those mutual funds. You know, and that's how we are able to enhance your return. Your NTB, based on what Busola said now, is about 1% or 2% or 3%, depending on the maturity, but very low single digits. But at the corporate issuer market is a little bit higher, you know, 5%, 6%, some 8%, bond space, some 12%. So with that, you're able to enhance that your return, and that's why you need to take mutual funds very seriously. Yeah, Rotus.
Fantastic. And also, I was going to ask, you know, what then do people invest in? But you've given those options with regards to the investment options that United Capital is offering to investors. So folks that are tuned in, you definitely want to take advantage of that. All right, so very in depth. We could go on. There's so much in the report that we could talk about. But as Wale just pointed out, we got lots of questions here from our lovely audience that's been tuning in and watching. So folks, I'm gonna toss these questions over to you. First one, Eromosele Aziba says, do you expect to see further depreciation in the value of the naira? If yes, when should we expect to see it? So we've touched on that. You folks have already touched on that. But when? We didn't go to the when. Whip out the United Capital crystal ball. If you can, maybe attempt to say when could happen.
Well, if they are talking about reversal in the parallel markets, I think once oil price rebound to levels they were before, you can see a rebound. That 450 can converge to around 400 or 380. Yeah.
Okay. We have a question from Silas Kanwa. He says, he or she says, well, Silas sounds like a guy's name, but who knows? What is the outlook for Treasury bill rates in the second half of 2020? Whichever one you want to take that.
So I think basically the Treasury bills market will still remain the same. I mean, we all know it's basically under lock and key, given the fact that local investors can no longer buy OMO bills, and for short term everybody's rotating into the small size NTB market. So definitely rates would still remain at single digits for the rest of the year.
Great. Thank you for that, Busola. Thank you, Wale, for your answer as well. This next one is from since we really do have a global audience here. Tampirubari Osaro. Great, I love that name. How will the unifying of our exchange rates affect the consistent devaluing of the naira?
Well, I mean, I'm not sure, it will really affect consistent devaluing. By consistent, I'm sure the guy is talking about every 3 or 4 years. But what a unified exchange rate will do for us is that it gives, the global investors who are looking to invest in Nigeria, which is good for us, it's good for employment, it's good for our market. It gives them a clearer picture of, the rates in Nigeria. If they want to come in, they are not distracted by a 450 rate at the parallel market or a 300 rate at the official window, or another 360. They look at Nigeria and they see one rate. One rate is good. It gives investors a bit more certainty. I think that's what we need to take out of that.
Fantastic. Great. Question from Michael Peter. What are your thoughts on the federal government's 2021 to 2023 medium-term expenditure framework and fiscal strategy? I believe the finance minister has a webinar or so, just like ours. I think she's watching this webinar now, and then after she's done watching this one, she's going to start her own webinar where she's giving out that framework. So what do you guys think about that?
Well, our Minister of Finance, they are very patriotic. The budget is about stimulating growth, because when you are coming out of a recession, you need to pump in as much cash as possible to revive economic activity. But like every budget estimate in Nigeria, the performance is the most important thing. What we would like to see is, the capacity of the government actually implementing those budgets. We've been borrowing a lot lately, but we need to see the dividend of those borrowing. Borrowing is good if you apply it properly, but if we are not seeing, real results, that's where the problem is. But it's a plan, and it is a good one, but we need to execute. I mean, those are our thoughts. But the government is doing the right thing, planning to pump in a lot of money into the economy to revive growth. Many people get employed or get jobs, economic activity will bounce back, that's the right thing to do.
Excellent. Okay, another question from Ife Turi Doguje. Should we be worried or stay calm? I would like to know. Ife, forgive me if I didn't pronounce your name properly. Forgive me, but I know you're watching and I know you're tuned in. So should we be worried or stay calm is Ife Turi's question.
I think that we have no other option than to stay calm, because panicking doesn't help anyone. So except you have a miracle from God that is going to bring a vaccine for us, we have no other thing to do than to stay calm and try and survive this year. So wash your hands, use your hand sanitizers. That's the best thing I can tell you.
I mean, somebody once said that nobody gets calm by saying calm down.
Yeah.
But
Right.
I mean, I think I'm going to say again that, guys, let's be calm. You know, about 100 years ago, there was a pandemic and the world
Yeah.
survived it. I was telling my colleagues that the world has advanced both in terms of technology, knowledge, and all that. We will definitely overcome this. It's a challenge. I mean, and we are still here today after the scare in March. So let's be calm. Let's wash our hands, apply all the hygiene measures that, those in government and the health ministry have been telling us. And yes,
And wear
this will
face mask.
also pass.
And wear the
And
mask.
wear your face mask, yes. Wear your face mask. Traveling on third millennium, I see all those statues with big face mask. Big
Right.
statement. If those things can wear it, let's wear it too.
Exactly. Question from, thank you guys for that answer. Good answer. Silas Kanwai again. Silas is very tuned. He has a second question. He or she. Is our debt burden healthy?
Is it healthy? I mean, some guy in my IT unit yesterday was telling me that, see, US has the biggest debt in the world and they are not fretting. Why is Nigeria all over the place about debt? You know, I think it's healthy if you look at it compared to the size of your GDP. Just look at your debt compared to your income. If you have an income of 100 million naira and your debt is about 100K, you're okay, you can pay it.
Right.
The problem, however, that some multinational organizations have been saying is compared to the revenue is weak. And when you look at where the oil price is right now, it calls for concern. But the Nigerian economy is bigger than our oil exports. Our real capacity is in our people, and we've continually, demonstrated that by the sheer size of, inflow from our diaspora community, which lately has been increasing compared to the size of the oil revenue. So we only need to work out a framework around, our revenue sources. In January, the Ministry of Finance did something interesting. They launched the finance bill, they tried to increase VAT and so on. So all we really need to do to improve our revenue is to look inward, look deeply, we will be fine. I don't think our debt is so big a problem as many people are saying it. But the ones that we've taken, we need to apply them properly. We need to find a way to make sure that they spur economic activity so that people can pay more taxes to government. But before they can pay more taxes, they have to have businesses that bring in a lot of profits and all of that. So that's what we just need to do. This country is the largest in Africa. There's a lot we can do that we are not even doing yet.
Facts, Wale. A question from Kashmore Tokidi. How do we make use of the financial markets as a form of FX risk mitigation, given the current FX scarcity? Well, while you already mentioned you're getting against the FX, what's happening with the FX scenarios?
By the Eurobond fund. I mean,
you go.
Our guys that bought it in January, they're money now,
They're smiling.
Yes, they make, 8 to 7% on dividend yield on the Euro mutual fund. And then the devaluation also add an extra 6%, by the time they convert to Naira. If they convert to Naira and they are lucky to sell at the parallel market, I mean, if they don't convert to Naira, if we pay them back and they take it to the parallel market to sell at 450, I will just leave the calculations to you guys.
Good stuff. Question from, it says Angel Gabriel. So it looks like everybody, even up outside of Earth, watching this webinar. So Angel Gabriel says, what is the role of banks in helping fund SMEs and MSMEs to support the growth of industry, since we know that this will further create jobs and reduce the pressure on dollars?
Well, I mean, I'm sure Abami has one or two things to say about that. But thank you, Angel Gabriel, for not only watching over us, but also watching this event. But the CBN, if we leave the bank out of it, the CBN has a lot of intervention funds that SMEs and MSMEs can definitely take advantage of at the moment. Some of those funds are going for 5% at the moment. And, don't be an unbeliever or a doubter like a doubting Thomas. I've seen people that apply for that stuff and they got it. So you probably want to, work with your bank to access those funds. Yeah.
All right. Next question is from Friday Moses. This one I've seen it quite a bit. What's your view on the virtual currencies? I'll catch everything. What's your view?
Well, I think a lot of people, especially now, a lot of people are talking about Ethereum, Bitcoin, cryptocurrency. Even my younger brother, he sent me a message a few days ago and he's like, oh, you should invest in Ethereum. I was like, what is that? Like, can you explain it to me how it works? And that's the whole point. You shouldn't invest in something that you do not understand. I've been trying to understand Bitcoin for as far back as as far back as 2017, and I honestly still do not understand it fully. What exactly are you investing in? And there are a lot of regulatory issues around the general acceptability of those currencies. So why are you investing in something that is not yet generally acceptable? Well, maybe in the future, the governments are going to move towards regulating them. But for now, a lot of people are still trying to understand it. And there are so many gray areas. So you should tread carefully, especially when people tell you invest in Bitcoin and you're going to get 2 times your money. No, it doesn't work that way. You have to be careful with whatever it is that you're going to invest in. And the general rule is if you do not understand something, please do not invest in it. So.
Yeah. So just to add to Ayobami, right, when it comes to investing, it's very key you understand what are the underlying drivers of what exactly is going on. Like, if you're investing in stocks, you know that a company is somewhere with plants or has services and, is collecting revenue and also making ends. But Bitcoin basically and the rest of, cryptocurrencies basically run on the law of demand and supply alone and as low as possible. So it's very important that what you're investing in has an asset that is driving its performance, basically.
Thank you both. Thank you both for that answer. Okay. Gabriel came back with an FX question, which you folks already answered with regards to devaluation and what's going to happen. Ovie Ahure says, what is the likelihood of the federal government defaulting on Euro, since you guys have a Eurobond product? So what's the likelihood of the federal government defaulting on the Eurobond investment in the future, since most of the dollars come from oil and gas related revenue?
Fantastic question. I mean, that's wow. Angel Gabriel is really watching about us. Fantastic question. Well, that's a concern and quite valid, but don't forget, we recently got about 3.4 so billion from the IMF recently. One of the reasons why we are unifying exchange rates is so that we can get something from the World Bank. The AFDB is, giving us some of this facility as well, and the World Bank has a facility targeted at states. These are dollar funds that can help us to meet our dollar obligation for the Eurobond. So I don't think investors should fret. And there's still oil. There's still oil in the ground. So long as there's oil in the ground, Nigeria has one of the largest reserves in Africa. We are either the second or the first, largest exporter in Africa, depending on changes in the size of the kidney. So, I mean, calm down, guys. We will meet all our, dollar obligations. I mean, no cause for alarm. No cause for alarm at all.
Mm-hmm.
At $40, there's still a lot that we can do. The cost of exploration, Busola will speak to that. Yeah, is not as high. So we still make a lot of money from oil.
In addition to that, our the Eurobond that is maturing next year is just about 500 million. I think that we can definitely pay that off easily without any stress. And we don't expect things to stay the same till at most, worst case scenario, 2022, we should be up and running.
Okay. Let's see now. Ovie Aore has a question on the stocks. Wale already talked about stocks earlier, but it says, besides banks, oil companies, and Dangote Cement, where would you recommend I put my money in the stock market?
Put some of it in tech. You can get a copy of a few units of MTN. You know, they seem like a company for the future. Everybody is buying data for this kind of webinars and so on now. So MTN, looks good. Airtel is coming up, but our recommendation there is, MTN. Um, yes, we mentioned the cement companies, some consumer goods company. If you can get hold of them, they're also good. Maybe the likes of Nigerian breweries and Nestle, considering their price at the moment. Yeah.
Okay. Okay.
Yeah.
All right. So
To also add,
go ahead.
okay. Yeah, to also add to that, on the consumer goods bit, I think it's quite to sort of have their product portfolio in essentials. Like you have the likes of Nestle, the likes of Dan Sugar and Flour Mill, that what they are producing are things that, there will always be a demand for. But, the others that deal with maybe home appliances, electronics, and so on, might not have it as rosy this period. So consumer essentials, basically.
Great, great picks there. And of course, we always have to add that, when making your stock picks, you want to consult, financial advisors, and we're talking to, financial advisors right here at United Capital. So be sure to consult them when making your picks for your stocks. Let's see now. Francis Atto says, what do you think about investing money in real estate? What do you guys think about real estate?
Wow. I mean, I'm sure we have a lot of questions, but I have to answer real estate, and we are running out of time as well. But maybe not this year if you want to invest in real estate. If you want to invest in personal property, fine, you can go ahead and all that. But with what we've seen in the hospitality business, what's happening to commercial real estate, if you're a big investor, you probably want to slow down for now, because this coronavirus is keeping everybody at home, and Obama is wondering when she's going to be coming back to the office and all that. So what that means is that demand for such properties is going to be weaker, and the yield on those kind of investments too. And if you look at between 2016 and now, the Nigerian real estate sector has been in a recession. It's yet to come back. So, but if you want to invest in a personal property, you want to rent it out for residential purposes, maybe for retail, commercial purpose too. Those want to have shop and store. For there's a lot of online business all over the place now. Some of them need stores. Fine, but if you are going big and you want to do commercial corporate offices, you might want to check for the pros and the cons properly, especially over the next couple of months because of this coronavirus.
Great stuff, folks. Our public out there, that have been sending all those fantastic questions. Thank you so much. I'm sure you got a lot of satisfaction from the answers from these smart analysts with United Capital. Again, we've been discussing their markets in H1 2020. What's next? Up in the air is the title. It's a great report. I really encourage everybody to hop in there and read their report. I've been talking to the head of research at United Capital, Wale Olusi, Ayobami Omole, research analyst for the banking sector, and of course Busola JJ for oil and gas. Any final words from you three?
Well, from me, I would just say that we have folks who also would like to get a copy of our daily mails. If you want to do that, you can sign up or send us a mail, research@unitedcapitalplcgroup.com. We'll add you on our mailing list. But in terms of final word, we really want to appreciate joining us for this event. For those who are fretting, don't fret. Keep your calm. Everything will be fine again. See the opportunities in this crisis. Billionaires are made in crisis, so take advantage of whatever opportunities are there. Instead of fretting, look closely at where you should put your money, and by the time we're out, you should be richer. Thanks, guys.
Ayobami or Busola, any last words from you two?
Okay, so I would just like to tell everyone to be careful. There are a lot of scammers out there, especially in this time. So as much as you're looking for investments, don't go and invest in real estate that they're telling you 100% returns. It doesn't work that way. And at United Capital, we do not double money. So if they're telling you they're going to double your money, they lie. They're going to steal your money, and that's the end. So Stay safe.
And don't send money to any personal account number.
Right?
Yeah.
Yes, if it's not, an official account number, if it's for us, it has to be United Capital, either the mutual fund or the securities or something. But if it's Wale Olusi or some other name, don't send money to any personal account number. They are scammers. Please. Many of them come during crisis like this. In 2016 or 2015, or during that period, MMM was all over the place alongside so many. I've started seeing a number of them again. They rise and fall with crisis, So be careful, guys.
Busola?
I agree with what Ayobami and Wale have said, and just my final note is to, if things become, if you're trying to understand more of investment products and the products we offer, you can always reach out to us, the research team or the customer service team to, get information on what you can invest in and, how you can make money even in a pandemic.
All right, fantastic stuff. Thank you all so much for your in-depth answers, for taking us to the report. It's been great. Thank you all to everybody that sent in questions. Thank you, United Capital. Continue leading the way. You guys are fantastic. Thank you, Ayobami, Busola, and Wale. You guys are fantastic. Cheers. I'm again, Rotu Sodiri, hosting a Business Express on Smooth 98.1 FM. And we'll see you guys when the next report comes out from United Capital.
Yes, sure. Thank you very much, Rotus. Really appreciate it.
Thank you. Thank you.
Yeah.